how much money you need in your pocket to do a property deal can stop you getting started. So we thought we'd talk to somebody who deals in that world every single day. So we've got a broker in to talk about the different kinds of finance and the different options that you've got to reduce the amount of money that you've got in your pocket and grow your portfolio. So with us, we've got John Kefford from Sourced Financial Services. So to look into getting into property with as little of your own money as possible, we've got the head of Sourced Financial Services, Mr. John Kefford, with us. Welcome to the podcast, John.
Thank you, Chris. Thanks for having me.
So let's just get right into it straight away.
Okay.
Because this rumour goes around. Is it true you can buy property and add it to your own portfolio without using any of your own money?
I guess the answer is yes, but it depends on the kind of strategies that you're kind of looking for.
Okay.
So you're always going to need some money, okay, to pay for fees and things. But the three we see a lot at Sourced is below market value transactions. So those are properties where you're purchasing it at a perceived below market value. And that could be a number of reasons why. So that could just be people that want to have a quick sale. Could be they didn't sell at auction. Could be repossessed properties, that kind of thing.
And when you're talking about below market value, because I see a lot of people saying, oh, this is below market value, but that's only based on their estimation. When you're talking about market value or below market value, I guess what you're talking about is what the surveyor who communicates with the lender, what they think the value of that property is, and you're buying it below what the surveyor is saying that the value of the property is.
Exactly that, yeah.
Okay.
So if it's, on Rightmove for 200,000 and you buy it for 200,000, then the chances are, because Rightmove's open website, then it probably is going to be worth 200,000. But if you're buying kind of off the market kind of stuff where it's through an estate agent that is kind of giving you an inside word, or it is someone that's selling their whole property portfolio and they want a quick sale, something like that where you're quite confident that it is below market value, then kind of how it works is you normally have some kind of bridging finance, which is kind of a flexible form of finance. So the bridging lender, there's quite a few in the market, but there's quite a few now where someone will lend you 100% of the purchase price. So if an easy example, you buy it for 100,000, but the property you think is worth 200,000. In certain circumstances, they can lend you the full 100,000. Kind of the lenders that we use are kind of a bit more flexible, I'd say. So normally you'd have to put at least 10% deposit in, but that's still better than the 35% deposit like you normally would.
Yeah. So you're looking at 10% deposit on the value against the value of the property, but also
against the purchase price.
Yeah, the purchase price. Yeah. Sorry, but also you are going to need to cover those smaller costs. And I guess let's just take those smaller costs out, because they're a couple of grand, but they're not going to stop the majority of people out there from buying a property. What we're talking about not using as much of your own money as you can get away with is those bigger chunks of money, like the 10, 15, 20, 25% of the purchase price.
Yes.
That the most lenders are going to ask for.
Another strategy we see a lot is JV agreements. So that's you see a property that you think is going to be a good project, whether that's an HMO conversion, a ground up development, something kind of a bit chunkier. Then again, Source can help you with this, finding investors that we're willing to invest in you, and they can provide the deposit up front for you, help you fund some of the deal as well. Again, we have lenders that are kind of very happy with those scenarios, basically.
Okay, so we've got two scenarios. We've got two situations. We've got a situation where you're buying below market value.
Yep.
And there are lenders out there that will lend you 100% of the purchase price. However, they'll tend to ask for a 10% skin in the game, I guess.
Skin in the game. Most lenders like skin in the game, but there are some at 100%. There are some, definitely.
And then secondly, you've got a JV agreement where you can take out any form of funding, really, but you're going into business with another individual, and that other individual is covering all the financial costs.
Exactly that, yeah.
Okay. So you offer a wide range of financial solutions for property. So out of all the solutions that you offer, like, what percentage would you say that either one of these two situations that we've talked about occur? Are they common?
Okay, so I guess if you're kind of buying a residential property and it's a home for you to live in, that's not what you do, right? So this is purely investor type property transactions. So you want to get into property and you want to buy a property. So I would say it depends on the individual, right? So at Sourced, we see these transactions quite a lot, to be honest with you. Most of our clients will purchase it in one of those two forms, I'd say. I'd say very popular at the moment is below market value transactions. But again, we do a lot of JV agreements as well. So I'd say from 20 years worth of experience, it's not the most common form of transaction, but you've got to know what you're doing, and that's why we're here to help you, basically.
Got you.
I guess the third one maybe as well is kind of leveraging your assets, maybe. So, if you own your own home, or if you have other property in the background, but you just don't have cash, shall we say, then again, there are lenders out there that you can leverage those assets. So they can take a second charge on your home property or second charges on other assets you might own, which again is a good way of kind of buying property.
So let's have a look at each one of those three situations, and let's like just have a conversation about how you can make sure that you execute on that way of reducing the amount of money that you need to put into that property deal. So first of all, a below market value. Now I've heard, and you can tell me whether this is true, because you've got your finger on the pulse much better than I have.
Is this rumour on the street?
It's a rumour on the property street.
Okay.
Yeah. So I've heard that, in fact, this comes from an estate agent. So an estate agent will focus on below market value or selling below market value deals, right? Because they want to sell them to the people on their little black book and they want to sell them quickly.
Sure.
So what they do is they deliberately don't put that property onto Rightmove.
Yes.
So that surveyor hasn't got that data point, because what a lot of surveyors will do is they'll look on Rightmove to see that property and they'll see that it's on for 200 grand. And that's a data point that they can then use for their valuation.
Exactly that.
Right. As well as the purchase price. So they make sure that property isn't on Rightmove, and they make sure that surveyor doesn't know what the purchase price is.
Okay.
So it's a much more objective valuation from that surveyor, which means that if that person is purchasing below market value, they're more likely to get that difference that they're looking for, that the lender wants.
That's exactly true. And I'll go a step further than that as well.
Okay, there we go.
Whereas most lenders in this market will tell the surveyor what the purchase price is and what the on market value is.
Yeah.
Now, there's one lender that we use, shout out to Flex, where they won't tell the surveyor what the purchase price is.
Right.
So again, that surveyor is going in completely blind. It's giving an objective view about what he thinks that.
Oh, so it doesn't matter if it's on Rightmove then, it can, it can be on Rightmove, because that would be the wanted price, not the negotiated.
True, but I think if it was off Rightmove, again, that would help a little bit more as well.
Okay.
But But they don't tell. So that's kind of our go-to lender, I'll say, with regards to this.
Is there anything else that they can that people can do if they're looking to execute on buying below market value, reducing that deposit from 25% to 10%, or even lower? Like you said, some lenders don't require a 10% deposit. Yeah. Is there anything else that those people can do to make sure that happens?
I think it depends on the property, but I think the biggest thing I would say is probably actually not having it on Rightmove or something like that. Yeah. I think that's probably the one thing that would help you. And again, you just need to get into the estate agents' minds and that kind of thing. Like I said, their little black book.
Yeah.
That is, we do a lot. We probably do 2 or 3 a week on those. And they kind of tend to be people that have got really good connections with estate agents, basically.
Yeah. So. It amazes me. I talk to a lot of people about property and teaching them to talk to estate agents and how to talk to estate agents. Yeah. And it amazes me that people still think that estate agents shouldn't have a little black book. Like, it's just good business.
Well, exactly that. Yeah.
If you think about, like, from an estate agent's point of view, imagine if there was a property that was 200 grand and the estate agent knows that it would go for 150 grand. Now, that estate agent could put it on Rightmove and they're going to get 100 inquiries and they're going to get 50 offers, and they've got to manage all of those viewings, all of those offers, all of that communication. And they're still going to sell it for 150 grand. Yeah. Or they could call me and they could say, come and buy this property. That's one person to arrange for a viewing, one offer, and they're still going to sell it for 150 grand.
Absolutely, yeah.
So in terms of efficiency, it makes sense for the estate agent to have a little black book, doesn't it?
Yeah. One of my best clients, he's buying a lot of HMOs in Cardiff, Article 4 area, really hard to buy now because they don't come up often. And literally, the estate agent probably offers him 1 a month, I'd say.
Wow.
And he just he buys them like that. And I think he's probably on about 15 to 20 now.
Wow.
And he's
to Cardiff.
Yeah, he went to university there. He's not from Cardiff, he went to university there. Loves the area, and he doesn't even look at them because he trusts the estate agent. So, he's got that trust in the estate agent where they manage it all for him. Yeah, it makes sense, right? If you're an estate agent, you would probably do the same.
Cool. Yeah, 100%. Of course you would. Everyone's got their preferred clients.
Yeah, absolutely.
So now looking at the second strategy, which is JVing with somebody.
Yes.
What do lenders think about JVs? Is that an issue? Do you need to have a set contract in place?
So it's not for every lender. So some lenders will still want you to have some skin in the game. So again, a 10% deposit
Each. So if there's two of you...
No, just for yourself as the client. Okay. Some were happy with the 100%. It depends on the lender is the short answer. And some will want you to have the client on the SPV. Some were just happy to have it as like a second charge, and some are just happy to have it as an agreement outside of the collateral used, basically. So it depends how you set it up. I would say my kind of big advice would be to go to an investor that's got quite a lot of experience in property, and has got the ready cash available. Sometimes we see people that I could say, look, Chris, I'm happy to invest in you. Here's 200,000, but at the moment it's kind of tied up in my own property. I think you really need to have that cash in the bank, I would say. And that helps with the lending side of things as well.
And I'm guessing that if they have got a lot of experience, because something you said right at the beginning was it depends on your experience or how much experience. If they have got experience and you put them on the SPV, that counts towards the experience in your team.
Absolutely.
As it were. So that will open you up to more lenders.
Yeah, absolutely. I think experience-wise, it depends on the scale of the project. So if you're doing an HMO conversion or just a classic refurb, you can be a first-time buyer and have no experience, to be fair.
Oh, right, okay.
If you're doing like a ground-up project where you're going to be building 5 or 6 houses, then either you need the experience or actually the contractor has to be really experienced, basically, or the project manager, one or the other, basically. So there's a lot of people we do a lot of mortgages for that flip properties, right? So they could be in the trade business themselves, and they just go, do you know what? I've watched Home Under Hammer so many times. I want to do it myself, right? Oh, absolutely fantastic. These are the kind of people we like. So, they might own a home, they might not. They've got a kind of bit of cash behind them, but not huge amounts. And, they buy a property at 100, 85 to 100, 110, spend minimal money on it, and then sell it and make a profit and work your way up that way.
Generally, lenders are happy with a contractor that's got the experience. Yeah. Because surely from a risk point of view, that contractor could go bust tomorrow. That contractor could pull out. You could have a disagreement between the contractor and the developer, and that contractor leaves. And then you've got to pull somebody else in and who might not have as much experience. But lenders are happy with that. They're happy to
generally, yeah. I think, it comes, the lender, again, depends on the size of the project. But if it is a big development deal, then they will do their due diligence on that contractor, right? They'll be comfortable that contractor has done these many projects before and that kind of thing. So it's the scale of it. It's, if it's, a £200,000 property, it's different to if you're borrowing 10 million kind of thing. But in theory, that could happen, and it does happen sometimes, I guess, but it can happen.
And then the third of those scenarios was leveraging your other assets.
Yes.
So what can people do to make sure that they can execute?
Okay, so 2 things. So the most common one, I'd say, is leveraging your own home. Okay. Yeah. Now, obviously, there is a risk to that because, in fact, you're putting your family home at risk, I say, if anything goes wrong. But you should go into it kind of confident that it shouldn't, right? So,
and there's a couple of things that they could do. I guess they could either refinance their own home in full and release cash, or they could come up with a second charge.
Yeah. So the second charge. So normally, what we'd do is you don't have to refinance. So and that will save you some fees. So in effect, say for example, you've got a home that you've got, £200,000 of equity in there, and you want to borrow 100,000 to put as a deposit for this, then in effect, all the bridging lender will do is put a charge on the new property and put a second charge on your main residence. The cash doesn't physically come out. Yeah, it's just they put a charge on your property and use that across that. That's the easiest thing to do. And fees wise, you only necessarily sometimes have to do a valuation on your own home. Yeah. But it cuts out fees and things.
One of the things that surprises me is just the flexibility. The flexibility in the system, and like you said, these lenders aren't going to be open to it, but other lenders will be. Yeah. How much choice they've got over who they lend to and what criteria they're looking for who they lend to. So from your point of view, when you come up with justification for why you'd use a broker, I guess you spend all day. I mean, I know you were at the landlord show last week talking to lenders, right? So you get to know them and you get to know what their criteria are, so that when a client comes to you, you can then say,
Absolutely.
I've got a lender here that I talked to last week who are just
Absolutely.
exactly the right for your
I'd
situation.
say I've been doing bridging probably about 6 years now, and I've seen an explosion of lenders. So I'd say probably 10 years ago, probably bridging had a bit of a bad name. They're like, oh, that's expensive. Why are you doing that? Whereas now it's very mainstream. It's kind of in the media. It's out there. And probably in the last 3 years, there's probably been an explosion of lenders. There's probably about 200 lenders now, all doing slightly different things.
Yeah.
And it's about kind of picking that lender there's a lender for everyone, right? So to give you an idea, there's bridging lenders that are owned by banks. So the biggest ones, probably UTB or Precise, who are like big mainstream banks.
Yeah.
And obviously they're a little bit less flexible, but they have really good rates, shall we say, market leading rates. And then the other end is kind of private money. So these are individuals that have made a lot of money in, doesn't necessarily have to be property. You know, one of the main ones I can think of is a person that sold a toilet roll business, for example, for a few $100 million, decided to set up a bridging lender. So there's a lot of them there. Now, the private money ones are the most flexible ones, right? Because it's their own money. In effect, they can make a decision on whether or not they lend to you.
Yeah.
So if they like you, Chris, they like your idea, the numbers stack up, that's easier than going to a bank where they've got to go through a credit committee. There's a board of people that decide that kind of thing. You know, they're very nimble, so they can say yes or no in minutes, basically.
You know what this strikes to me, what I'm seeing here, is you've decided to get into bridging as it's exploding, right? And there's a lot of competition.
Yes.
Because all of these people have got a load of money, but there's a finite amount of people out there that can borrow the money. So those bridgers, those lenders, are relying on you to release their money, to use their money.
Absolutely.
It's only when their money's out is it making it interest. Right?
Exactly that.
So you must get treated to loads of corporate days and hospitality and stuff like that. So
you know me too well, Chris.
Yeah, there we go. So what's the best corporate day that you've been on?
Oh, the best corporate day I've been on. Silverstone maybe, probably.
Oh, nice.
Let's get the British Grand Prix. I went a couple of times. This is the normal stuff like golf.
Yeah.
Always some nice golf days.
That's why you're never in the office.
It is. Bolton Beer Festival, big shout out as well to that. So that was pretty good.
Yeah, that's not bad. You've timed that really well, haven't you?
Yeah, that was a good one. But Christmas coming up is always good.
Okay.
Always a good
All right.
time.
Well, if you need somebody to go with you, you know, I'm always happy to talk to lenders about stuff. I'll talk to anybody about anything.
Maybe, Chris, maybe.
Oh,
Maybe.
play a tough game, John. All right. So with that flexibility that they have, you mentioned about different strategies, or you mentioned a strategy, and this group of lenders here would like to lend to that strategy.
Yeah.
So does that matter? Do the lenders have preferred strategies that they would lend against?
Yeah, they do.
And is there any strategies that are suffering because lenders, you know, go after the low-hanging fruit more so than the more tricky stuff?
No, I think with the amount of lenders there are, there's something for everyone.
Okay.
So,
and I guess if there are fewer lenders that will offer to that strategy, it just means that the rates go up, so they're making more.
Yeah, exactly. I'd say probably the big thing at the moment, apart from those strategies, is probably auction finance as well.
Mm-hmm.
So auction finance is like a form of bridging finance as well. So the big thing about auction finance is the speed element, because you have 28 days from you winning that property to it completing.
Mm-hmm.
Now, normal kind of mortgages, you'll never get it done. Anyone who's ever bought a house will tell you that 28 days is really quick, right?
Yeah.
Because you know what the legal side's like. And
6 months.
6 months.
Never mind 28 days.
Every time I bought a house, it's been 6 months pretty much. So there's lenders now that cater for that market, right? So they've got a whole process set up where they know when as soon as the gun goes, they can complete within 28 days.
So then answer this question. You must know, like, why does it take mortgages so long then? If a mortgage is going to take 6 months to get through, how come you can borrow the same amount of money from somebody else, but you can fit it in within 28 days?
Yeah, well, how long is the podcast is the short answer. But there's probably in England and Wales, probably the legal side of things is probably the biggest sticking point. Mm-hmm. So the lenders take out title insurance and that kind of thing, whereas a normal mortgage lender wouldn't let you necessarily do that.
Right, okay.
And also they're just a little bit more quicker with regards to the offer conditions and that kind of thing. I think probably the legal side is probably the longest bit it takes. And, you know, I remember when I first bought my property, they were still using pen and paper and writing to each other, the solicitors, that kind of thing.
Nightmare.
I think they still do email now, but I don't know how many times they read their emails. But I think that's the sticking point. And that still happens in the bridging world a little bit. But, you know, the companies have kind of negated that kind of risk a little bit, where you can do dual rep, for example. But most of the time they use a tried and trusted solicitor's firm, basically. So
Yeah.
unlike if you bought a house, you can just kind of use any solicitor you like, pretty much, right? Whereas with a bridging lender, you can normally only use their ones that they say you can use, basically, if you want a dual rep. So they'll kind of have maybe only 2 or 3 firms that they know that can produce the goods within 28 days.
Right, okay.
And even like the major lenders, like Together, for example, they pretty much have their own legal team that do it. So that's how they negate that risk, basically. But they just have a slicker process, you know. It's the underwriting process is quicker, the valuation, they can do desktop valuations, which again, more of a mainstream lender can't these days. So there's a whole thing they cut out time, basically.
So I reckon most people that are listening to the podcast will understand what mortgages are. We've been talking about bridging.
Yeah.
Just give us like a high level overview as to how bridging differs from normal mortgages.
Sure. So bridging is kind of asset-based finance, right? So how it kind of works really is only short-term finances need to be. So it started off as you buy a property that just needs refurbishment, right? So it might be a property that's still stuck in the 70s or something like that, where you know you're going to put a new kitchen in, you're going to redecorate it all, right? So it started off as that kind of finance, because if you buy a house for investment and you're going to rent it out, a normal buy-to-let mortgage, the lender will be like, right, you've got a week basically to let it out because we're lending you this money.
Yeah, it can't be vacant for more than a month, for example, as a term on your mortgage. Yeah.
So bridging finance is basically an in-between stopgap, like a bridge, where you would buy it and then do the work and then you'd refinance it to buy-to-let.
Got you.
And then kind of other things have evolved within that, basically. So if you want a quick sale, basically, or if you want to buy it really quickly, auction finance, that kind of is the flexible way of lending, basically. And because it's based on the asset, they're a bit more flexible about who the client is, shall we say. So like I say, you can be a first-time buyer, you can have credit impairments, you can have a CCJ, you could have been bankrupt, that kind of thing. They're not too worried about that. So it's just think of it as mortgages, but really flexible.
So mortgage companies, they do a lot of background checks on the individual, right? Because it's that individual that's got to pay back that mortgage for 25 years or whatever the term is. And so they want to make sure that you are reliable enough to pay back that mortgage. So they do a lot of like credit checks and all that kind of stuff. Whereas for the bridge, what you mean by asset-backed finance is the bridging company has got the reassurance that they're putting their money against an asset that is going to be worth that.
Exactly.
And so they don't need to know as much about you. Because they know that the property is worth whatever's covering their money. So they're happy to move forward.
They still do a credit check and things, but if you know, if you have had these impairments, they're willing to more overlook it.
It's not critical.
Exactly that, And income and things, it's not, you know, like a traditional mortgage, it's 5 times your income or something like that. Nothing like that, you know.
And then that mechanism of buying it on a bridge and then refinancing it onto a mortgage, that's then brought about different strategies that people execute on. So if you are going to do a flip, if you're going to just tart up a property and then sell it on, or tart up a property and then refinance it, that mechanism can now mean that you buy it on a bridge, you do that work, you uplift the value of the property, and then when it comes to the refinancing point where you then put it onto a mortgage because you're going to add it to your portfolio over a long period of time, you can release a lot of the money that you've spent on it, if not all of the money that you've spent on it. So now you've got that money back in your pocket to go on to the next one, and effectively you've added a property to your portfolio without taking any of your own money.
Exactly that,
Right.
Exactly that. Really common, especially with lenders now that the buy-to-let lenders where they're increasing the loan to value. So traditionally, 25% deposit was like a given, right? So now 20% deposit, more the mainstream lenders are doing 20% deposit.
Right.
Some are doing 15, but again, you pay for it in the bit of the rate. But kind of 20% is more common. One thing that you just got to be careful with is a lot of the lenders won't let you do what's known as a day one. So basically that's saying is you have to own the property for at least 6 months. But there are more and more lenders now that will let you do it within 6 months, basically.
Yeah. Does that tend to be if you're using their bridge and their mortgage, or can you go between companies?
You can go between, So, it doesn't matter. So if you buy a property on the bridge and it's within 6 months, again, there's quite a few lenders now that will let you do it. Even the next day, so you can buy a house and you can refinance it next day.
Is that a pain to organise that? If you're going to use between 2 different companies and you're going through, because presumably you're going through all the paperwork to do the bridge and the mortgage at the same time if you want to complete on the bridge on day one and then refinance it on day 2.
So I guess it's a pain for me, but not for you.
That's nice of you.
I
Thanks
try
very
to
much.
make it easy as possible.
Do you do that out of the goodness of your own heart?
No, not at all. It's my job. But yeah. So we try to make it as easy as possible. So I think you're right. Is that there are lenders now, buy-to-let lenders that are kind of moving into this. We'll lend you the money to buy the property and refurbish it. They don't call it a bridge, but it is a bridge.
Mm-hmm.
And then you can remortgage to us. And in theory, it's a quicker, easier process. I would say if you wanted my advice from experience, it's still better to do the two separate, because there's bridging lenders that's just what they do, right? They buy a property and they let you refurbish it.
Sure.
And then, then remortgage it to a buy-to-let, because I think, again, they kind of underwrite it. So the initial bit where you want the bit to be quick at purchasing the property, the buy-to-let lender might not be as quick as underwriting as a normal kind of bridging lender.
Yeah.
They might not lend you as much. They might not be as flexible. Loads of things that you need speed for at the beginning, they're not going to give you. But there are a lot of lenders moving into this space. But yes, it reduces fees a little bit, but it's probably worth paying a little bit.
Yeah, just to make sure that you get it done.
Advice, yeah.
Okay, correct.
But yeah, no, it's I think a lot of the specialist lenders in the buy-to-let space, are absolutely happy if you buying a bridge, refurbish property.
I'm surprised you can get a 15% loan to or deposit required for a loan to value on an investment loan.
Yeah, you can do. Yeah, like I say, you pay a higher rate, but
What's the difference? Roughly.
So I think
compare a 25% deposit to
so I think 25% deposit, you're probably looking at average rate of about 5%, just over 5% at the moment. You're probably looking in the mid sixes for a 15% deposit.
Right. Okay.
So it's if you've got the money to put a 25% deposit down, I'd recommend doing it. But if that's what you've got, then
if you're going to use that money, you're going to refinance that money to then put back in your bank and not spend it, so that you then go on to your next investment and you scale up your portfolio quicker, then maybe it's worth it.
Yeah.
Okay. So I'm looking for some top tips.
Okay.
Now. Okay. So I'm going to run a couple of scenarios by you.
Okay.
And you need to give your broker top tips.
Okay.
How to get approved fast.
Okay. So I think the easiest thing is having all the information up front straight away. So some people hide the truth, shall we say, when it comes to their...
In what way? Give us... don't give us specific examples, obviously.
So some people won't be clean about their credit rating.
Right, okay.
So you might have a CCG in the background.
Do they really know? Because surely they know they're going to get found out, surely.
Well, they say that, but you never know. So, if I always say to people, and it's about asking the right questions for the broker as well, but if you're asking the right questions, you should find that out in the initial conversation. Right?
Have you got a CCJ? How is that not the right question?
You talk about the credit rating or something like that. But yeah, that really helps. So I'll just say be honest and open about the property, about yourself.
Is that what you have to do though? Considering it's such a big purchase that you're buying a property, instead of phrasing it like, have you got a CCJ, which is a little bit confrontational, you'd say, and what would the lender think if they looked at your credit rating? Being a little bit more gentle, and then you'd get people being more forthcoming with that.
Yeah,
really?
I always ask the question, I guess I trust you got a good credit rating. Is there anything I need to know about that?
Leader the witness.
But I think that's really important. So, we see a lot of kind of properties, shall we say, that seem like a good deal at the time, shall we say. And sometimes I have a phrase where it's kind of, there's no such thing as a free lunch, right? So if a property is too good to be true, it can be. So, whether it's the lease length, if the property is, not structurally sound or something like that, then, you only find that out down valuation, which, can be a week, can be 6 weeks down the line. So, be open and honest. Tell us everything that you've encountered. Because sometimes, we see clients that have been to other brokers before and it's been declined for whatever reason. Like, tell us.
I guess that's
been to somewhere before. It hasn't happened for whatever reason. We need to know about this stuff, because then we can place you with the right lender.
Yeah. That's critical, isn't it? Absolutely critical.
Absolutely.
Right, you need to know all that information. Don't hide it, hoping that nobody finds it out.
Yeah, exactly. Because more often than not, you will find it out. And again, it could be a complete time waste. It could cost you money.
All right, next one. As a broker, what are you looking for? If somebody brings a project to you, like when you're initially going through your judgment as to how good a client that person could be, what are you looking for?
Okay, so again, it depends on the size of the deal and that kind of thing. But I guess for the larger deals, we need to make sure you're confident about knowing what you're doing, and you have like a schedule of works in place, so you can go, right, John, this is exactly what I planned. I've got it all listed detail. I've done some costings with regards to how much it's going to cost. The more detail we have that, the better, because that's what the lender needs to know. And the lender can make a very quick judgment easier if they know all that kind of information up front. If you're just kind of drip feeding that information, then that delays the whole process, right? So I think experience, can go a long way. But like I say, we do a lot of first-time buyers, first-time landlords that are just kind of getting into property where, it is their first flip or first renovation, that kind of thing. We guide you through that, shall we say. But, if you come to me and say, I want to do this £10 million ground up development, then of course we're going to ask you a few more questions, shall we say.
But it is all relative, right? So if you're going to do a £10 million development, you are going to want a schedule of work. You're going to, you're going to want a lot of detail before you release that amount of funds, right? But then coming back to a 30 grand property in, I'm not going to say a town because we'll get haters, but a 30 grand property that you're going to do a tart and turn, and you're going to sell it on for 90 grand, you still need that information for you to tell the lender, so the lender can take assurance from it, but you don't need as much detail as a £10 million deal.
I think having your documentation up front is kind of helps as well, especially with the speed. So, there's different documentation you need for different types of loan, right? So bridging loan, you probably need a little bit less than most, but if in the process of you looking at a property, you might want to make sure your passport's in date, your driver license has the right address on it, you have a utility bill to hand, you might have 3 months bank statements, that kind of stuff. If you've got that all to hand, and then when we ask for it, you can quickly send it all, again, that can cut down a lot of time.
Just thought of a question. Have you ever refused to move forward with somebody because they're being a bit of a nightmare? And I don't mean a bit of a nightmare because they're being like shouting at you or something like that from a safety point of view. I'm talking about like they're just not getting back to you in time. They're just not doing what you're asking them to do. And you've just said, right, I'm afraid I can't move forward with this because you're not listening to what I need from you.
Absolutely. I think you always try and put it in the client's hands, right? So say, for example, I tell you, right, Chris, I need 3 months pay slips, I need your passport, I need your driving license before we can proceed. If you're not giving me that information, then I'm not doing anything, right?
Yeah.
So until you provide me all that information, as soon as you've got all that information, I can go, right, let's go. So it's in your court, shall we say? So if you're not giving me that information, so
I come back to you and I say, John, where are we with this loan?
Yeah.
Listen, the ball's in your court. It has been since the last time we talked, right?
Exactly. Yeah, exactly that.
Then if I call again 2 weeks later and say, where are we with this loan? And you have the same conversation, you're saying like, there's no point in calling anymore.
Yeah. Well, I wouldn't necessarily say that. I would just say, look,
really?
I'm still waiting for your information.
Okay.
So, okay. Be polite.
So you'd always dangle the carrot of reconciliation.
Absolutely. No, there have been a few times where, I don't know, you find out something about the client that you think, actually, unfortunately, we can't help you. I'd say it's rare, but there have been a few times, shall we say.
You're just a problem solver, aren't you?
Well, that's what we try and do.
All right, so tell us about costs or fees, because a lot of people won't have experience in bridging finance in particular.
Okay.
So tell us about costs or fees that might be apparent in bridging finance that they won't have seen in mortgages that they need to know about.
Okay. So the biggest thing would be the arrangement fee.
Okay.
So when you do a normal mortgage, a typical arrangement fee from like Halifax is £1,000 these days. You add into the loan. Okay. Yeah. So with bridging as well as specialist finance, so like buy-to-lets, that kind of thing, the arrangement fees are higher. Okay. So within the bridging finance world, typically an arrangement fee is 2% of the loan.
Right.
Okay. Which is added into the mortgage. You can pay it up front if you want, but most people don't. And then in the buy-to-let space, it can be as high as 9% for an arrangement fee.
Wow.
So I know, not as common. We haven't done too many of them, but needs must sometimes. But it's rate dependent. So the higher the arrangement fee, the lower the rate. And what we do is we work out the most cost-effective solution. But 5%, 3%, or even a flat fee of 2,000, something like that, they're common, right? So kind of be prepared. Arrangement fees are going to be higher than the normal mortgage. Probably valuation fees are a bit higher as well. So a lot of the mainstream lenders subsidize valuations, or they just ask for a basic valuation. So a lot of them are free. So you get a mortgage, normal property, the lender will cover that cost, whereas in bridging it doesn't quite work like that. So you're looking at around about £1,500 depending on the property value, but I'd say it probably starts at around about that fee. You can do automated desktop valuations, depends on the lender, but be prepared to pay a little bit more for a valuation.
But just like mortgages, all of those fees should be transparent and available up front,
absolutely,
right?
Absolutely, yeah. With the way the valuation works is a little bit different. So with Halifax, for example, they have a fee structure. Okay, so 200 grand house, it'll cost you 100 quid, whatever. Bridging lender doesn't quite work like that. How it works is they will send you, a bridging lender will send me a quote, and then I'll pass it on to the client, but it won't have a valuation fee on there. Because what they would do is, say for example, you go, right, John, I want to go ahead. Then what the bridging lender will do is contact the local surveyors, and we'll get a range of quotes normally. So normally 2 or 3, and each surveyor will say a different price. So one we did yesterday, one surveyor quoted 2,500, another surveyor quoted 1,300 quid. And then it will give the availability. So it depends how quickly you want to move as well. So we'll just then pass that on to you and say, which one do you want to go for?
Got you. We're going to play a game then.
Oh, another one.
Go on.
One final fee, which a lot of people don't realise, is if you're buying a limited company, you have to do a personal guarantee. So
is there an actual cost associated with that?
There is
a liability.
Yes. So you have to seek independent legal advice, basically. Now, you can do that within your solicitor, and it'll be another solicitor within that firm. That can be quite expensive. They can charge £1,500 per person, or you can do it online and do like a Teams call or something, and it's about £150.
Yeah.
So again, a hidden cost that most people don't realise, and that's buying a limited company, normal buy-to-let mortgage, bridging, whatever it might be. So again, another fee to be taken into account.
Brilliant. We are going to play a game.
Okay.
We always play a game.
Yep.
Your game is called Deal or No Deal.
Okay.
So I'm going to give you a couple of scenarios, and you're going to tell me whether it's something that you would look to fund or look to move forward to fund.
Okay.
Or whether you'd walk away from it.
Okay.
All right. So the first scenario, this is an auction property. A property at auction going for 150k, needs a quick 50k refurb. Afterwards, it'll be worth 250k. Needs funds in 28 days. Is that something that you'd look to fund?
Absolutely, yeah. That sounds very feasible.
Is that like bread and butter?
That is bread and butter, absolutely. That's the easy one.
So how many, this is maybe a bit of a technical question, but how many lenders, right, with that scenario, I imagine your brain's working as in that lender, that lender, and that lender. They're the 3 that I want to talk to first, or 4 or 5.
Yeah.
So who are you thinking of for that? You don't have to say, but how many lenders have you got in your little pool of ones to go to get that kind of deal?
Okay, so there's probably 2 or 3 that I would go to like an auction purchase for. So there's 2 types of lenders with regards to this, whether you need any funds to do the refurbishment. So if it's just you want to purchase it on a bridging loan and you're going to fund any refurbishment costs, or there might not be any refurbishment costs, there's lender A, for example. Or if you need to borrow some money to do the refurbishment, you need a different type of lender, basically. And they can fund up to 100% of the refurb costs.
It really surprises me that there are, in that scenario, when you get into the nitty gritty of that scenario, there's one lender. Well, absolutely suits that.
Yeah, exactly. Well, there's the answer to the question is there's probably like 100 lenders.
But the ones that you deal with.
Tried and tested. I know this lender's going to do it. Let's move on.
Took you on the best corporate day. That was the Silverstone one.
Nothing like that, guys.
Sure. A refurb.
Yes.
Flip. A tired but sound terraced house. Purchase price 30 grand refurbishment budget. The plan is to do it up and sell for 275 over a 6-month period. Deal or no deal?
Okay. So I would say there's not a huge uplift in the money you're putting in. So especially when it comes to refurbishment. So the money you want to put in, you want to see a big uplift in that. Okay. So there is,
especially if you're flipping, right? I guess it's more important for a flip.
Yeah.
Now, if you turn that around to they're going to do that and then they're going to keep it and refinance it, have you got more appetite for that?
You've got more appetite for that. What you got to make sure though is that you buy it for X amount, you're spending X amount on it. You need to make sure you've got enough to refinance it in. You see what I mean? So you've got to at least leave that 25%, 20% in there just to make sure it will mark it up to that.
But then you're looking at the rental income to get onto that mortgage.
Exactly.
And that you're going to cover that multiple of the rental income to your mortgage repayment.
So it's really important. So when you do a bridging loan and you're not flipping it, you're not selling it, then a really important part of that is to make sure you can get out of a bridging loan. So making sure you have that refinance option for you available. So the bridging lender will come to me and say, John, we need some kind of agreement in principle, something with another lender to make sure they're not stuck in that.
Yeah, got you. And what kind of margin will the first bridger be interested in from the mortgage company? Like if you're relying on a valuation of 200 grand, regardless of this situation, but actually the survey comes in at 190, you're probably going to sell it for 180, but the original valuation was 200. Would they be looking at like a 10%, dropping it 10%
so
in their evaluation of it?
Well, in short, you'd have to put in more of a deposit.
Yeah.
Basically. So, the bridging lender will always kind of give you their max amount they would lend you straight away. So if that changes and the value comes down, it basically means you have to cover that cost, basically.
Got you. Last one. A flat for 180k. The plan is to do a light refurb, rent it out, and maybe refinance in a year or two to get your money back. Deal or no deal? Doesn't say what the end value is. So
okay,
it's not going to be much of an uplift.
It sounds, again, if you're going to keep it, then I think it depends where it is.
But you could mortgage this one.
Yeah, absolutely.
Doesn't need to be a bridge, right?
No, not at all.
But you are going to need that person to have a bit more money in their pocket to get it done.
One thing that's really big at the moment in the world of buy-to-lets is on the valuation side is making sure that property is good to let straight away.
Yeah.
So a lot of people will buy a property and they'll think, this is fine. Yeah, if someone's living in it at the moment, it's absolutely fine. Why wouldn't a lender be okay with that? We're getting lots of declines from lenders where they put like a nil valuation where they say, actually, do you know what? This property is a bit tired. We don't think a person would want to live in that property. You're going to have to kind of do a bit of a refurbishment, but with a bridge or something like that. So a lot of people don't realise it. It's a higher standard than like a residential property. So, traditionally when I first started, they always said, as long as it's got running water, you can buy the property. Whereas now, it has to be quite a high condition, shall we say, for a buy-to-let mortgage.
Yeah. So the takeaway that I'm getting from this is if you're buying something that at market value, you need a bit more money in your pocket. If you're buying something and you're a bit more creative about the way that you finance that, either buying it genuinely below market value, or using other people's money to help you fund it, then you need less money in your own pocket.
Yeah, exactly.
Right?
Yeah.
Okay. So
but there are actually just one thing actually on that though. There are some bridging lenders again that will hire the LTV. So there are lenders now that you could, in theory, have a minimum of 15% deposit instead of your standard 25.
Okay.
So that would help as well, reducing the costs.
So again, it's worth having a conversation with you because you know about all of these people and all the different rates. And
exactly. Well, it changes all the time.
I was going to say, how often does it change?
Every day.
Really?
Depends if this trust is a prime minister or not is the short answer. But every day. There's so many lenders changing their rates, that kind of thing. You kind of got to stay on top.
So is that the first thing you do when you come in the morning? Just get a cup of coffee and look at.
I was going to say a cup of coffee for the game of table tennis.
Obviously, but then you have a look at how the lenses have changed since yesterday.
Well, they normally will provide you like email updates and things, but I'd say it changes every day. But the main lenders wouldn't necessarily say that changes every day. But there's systems we have, there's technology in place that helps you, shall we say, with kind of getting the rates and things. But I think Bridge is more still on the traditional side, where it is a relationship building kind of exercise, and they would email you would speak to them, you pick up the phone. But I wouldn't do that to all 100 lenders. That's why it's key to just pick kind of 10 or 20, shall we say, that are your kind of trusted providers, shall we say.
Got you. Now we've got a quick fire round.
Okay.
So we can get to know you a little bit better.
Okay.
All right. Okay. I've got 4 of them for you.
Okay.
First one, the worst bridging mistake you've ever seen.
Okay, so I guess probably a generalisation would be auction properties where I would always recommend doing a survey beforehand.
Don't tell me somebody didn't do a survey.
So somebody didn't do a survey and it turned out that it did have a big crack in the building and it was unmortgageable. So even for bridging lenders. So what it'll cost you a lot to fix.
Had they bought it in cash, or had they bought it on a bridge?
No, they bought it on a bridge. Well, hope for a bridge. They won the auction, so you pay 10% deposit.
Right, yeah.
And then when they've gone to get the finance, the property had subsidence, basically. So that happens a lot, right? Because
God, the person that sold it must have been absolutely delighted.
well, this is why I say try and be as transparent as possible. But yeah, absolutely. So I would auction property. I would try and get a pre-survey done, basically, on the property, especially if you're really interested in it.
They must have been gutted.
Yeah, well, look, it just costs you thousands to underpin it.
Yeah.
Again, a couple of other things is people are getting forced into exchanging quickly and not before completion. So I'd always recommend not getting forced into that scenario. Kind of, there's normally, if someone's forcing to exchange, then you kind of think, well, okay, what's the issue here? So I'd make sure definitely there's at least a mortgage offer out on the table, because you can get the finance on that. But yeah, just kind of don't get pressurized into something.
A pet hate of mine, and hear me out, but Homes Under the Hammer.
Right.
Everybody loves Homes Under the Hammer, right? And I do as well.
Yeah. We've had clients on there, right?
Yeah, we have. Yeah, absolutely. But what gets me is, I bet that there's a lot of people that they've recorded over the years where it's gone completely wrong.
Yes.
And I think it would be much more transparent and honest of them if they showed the deals that go wrong as well. Because I've never seen anybody on Homes Under the Hammer where they've said, oh, you know what, I've lost 50 grand on this. I'm absolutely screwed. You know what I mean? You never see, do you? Everybody makes a bit of a profit, and they're lying, but because they're on TV.
Yeah, I think Grand Designs is a little bit different to that. They're the opposite, right? They always overrun. They can kind of complete the deal. So
but at least they tell you.
Yeah.
But Homes Under the Hammer, I think Homes Under the Hammer should show it, because I think a lot of people go to auction and they see people on Homes Under the Hammer and they go like, oh, I didn't read the legal pack.
Yes.
And you're like, oh my God.
Exactly.
But I've heard of properties that have sold in the Northeast where the property's been bought for 10 grand. But the fees in the contract to go through the auction were like 20 grand.
Yeah.
So they've done all their sums based on a 10 grand property and how much money they're going to make as a return on that.
Okay, yeah.
But they didn't realise that they had to pay 20 grand in fees as well. So effectively that property's cost them 30 grand. Now their numbers are completely out of whack.
I'd say, I said there's no such thing as a free lunch. So if you're buying a house for 10 grand, I'd definitely be looking into that.
You need to read that legal pack, right?
But I think normally the Homes Under the Hammer, they're quite experienced people, right? Generally when I've watched, you're looking at me now. But I always find that, you need to, and we're here to help your hand and guide you through this.
Yeah.
Do you know what I mean? One thing I would say is, I would never let you do something that I think is just going to be a complete disaster.
Yeah.
Because, whether we can do the finance or not, I would kind of give you my honest advice, basically.
Next one. Fastest deal you've ever funded?
Okay, so me personally, I would say 3 days.
Wow.
Which is quick. And there are lenders now that I think you can do same day.
No way.
Yeah, I've never done one.
From beginning to end, from introduction to funds.
Yeah, for refinance.
Okay.
Yes, not a purchase, I'd say. But I'd say, a week is not common, but can easily be done. Definitely doable, yeah. But like I say, you've got to be on board. The solicitors have got to be on board, and this is where you've got to use a solicitor.
So that person that you funded in 3 days, were they literally like in the starting blocks? They had like reams of ID and all that kind of stuff and surveys and everything that you needed to throw at you so that you could just...
Yes. Well, I guess how these kind of come about is it's been to other brokers, it's declined. You come to us and they're like really in trouble, shall we say. And they're like, we need this done in 3 days. So they've already given their information to other people.
Okay.
They've already got it there.
Yeah.
So it's kind of like, right, yeah, give me that. Right, let's do it now.
Pop that file into WeTransfer, send it to you, like 10 gigabytes.
Exactly. But, again, with a bridge and loan, you don't need huge amounts of stuff, right? So it depends on the transaction. But definitely, I know a bridge and lender that we use regularly that is talking about same day funding. So, yeah, I think a lot of the tech behind it is really coming on board. Online valuations, using tech with regards to the legals, that kind of thing, kind of going to the decision makers in the bridge and loan companies to get them to make a decision quickly, all this kind of stuff. I feel in probably the last 3 years it's really got much quicker, especially even with Halifax, for example. I've done quite a lot, even just same day offers with Halifax, which is unheard of about 10-15 years ago. So I think the whole kind of industry is getting a bit more tech savvy, shall we say.
So that leads on to the next question, which is, if you were going to change one thing about the process, what would you change? So I remember a couple of years ago, we'll just caveat this. I remember a couple of years ago at the Property Investor Show, which I always visit whenever it's on in London, there were loads of people there talking about blockchain and how blockchain was going to just completely revolutionise the conveyancing process.
Right, yeah.
And nothing's come of it. None. It sort of died down. And now when you go to the Property Investor Show, you don't see anybody talking about blockchain anymore.
No one talks about blockchain.
No.
They're probably just a different word for it now. I don't know.
Well, yeah, maybe. But what would you change about the funding process?
Well, if I take the legal aspect out of it, because, you know, I had a client recently that came from Australia, right? And basically they don't have estate agents in Australia, apparently. It's a bit similar to the Scottish system where
Goes to the solicitors.
Yeah. And, you know, they can, you know, most people buy a house within a week because there's not all this legal stuff. So if you take that out of it, because everyone wants to change that, I know the government are looking at certain things, but I think gazumping's quite a big thing. So kind of, if you say you're going to buy a house, you kind of have to maybe, if you put out a bit of a commitment fee or something like that.
Right, okay.
Because there's so much work that goes into it, especially with long chains, right? So, you know, anyone who's kind of been involved in a long chain will know how much of a pain it is.
When that person right at the bottom.
Exactly, that falls out. So, you know, that's probably something I'll change, gazumping. I think one thing that I kind of really want to embrace with this is kind of online valuations and desktop valuations and that. But I think generally we have the tech behind it now, where we don't necessarily have to go out and do a physical valuation.
But then what about that crack in the property that person bought without getting a survey done?
Yeah, true. There's always an element of risk, right?
Yeah,
There is an element of risk. But I think that would just, you know, there are plenty of lenders now that are embracing this and we're doing quick transactions with it. And, you know, that's the risk they take. But, you know, that's 1 in 2,000 or something.
Yeah,
I don't know. But
so apart from the legal part of the process, you think that the valuation is what slows things down the most?
Yeah, absolutely, because it can take 3 weeks or 4 weeks sometimes to even get a valuer. Or, you know, I think the biggest bane for clients and mortgage brokers is the valuation, right? Because a lot is riding on the valuation they give. So if you can find that quicker, sometimes at a touch of a button where you just go, right, the property's valued at 300 or whatever it might be, happy days. That kind of just takes that element of risk out of it.
Okay. And finally, dream property project that you would like to finance?
I really like large quirky things. So I'd probably say something like the Line in Saudi Arabia or something.
Oh, wow.
Do you know it? Like, it's not only is it $1 trillion investment, but it's like I just would like to see, when it's built, I'll just be like, wow.
Tell us about it, because some people might not know.
Okay, so the Line is in Saudi Arabia, where they're building basically a new city, basically.
Yeah.
And they're building 3 parts to it. And the line is basically, how to describe it? It's like a big line. So it's like straight, but really high. So it's only like, I don't know how far apart it is, probably like 200 meters or something, end to end. But it's really long. And basically there's like 1 million people that are going to live in this line.
Right.
And it's kind of like, imagine like apartment blocks straight up.
Yeah.
But for like 50 miles long.
Right.
That's what it's going to look like.
Well, okay.
Yeah, and inside it, you know, you've got there's no cars or anything, so there's like a train, there's a stadium that's going to be built on the roof, that's for part of the World Cup.
And you'd like to fund the whole thing?
That would be good. I'd be able to buy a bigger house with that.
You never know who's listening to the podcast.
You never know, if there's...
Whoever owns it.
Yeah.
Fancies getting in touch, then John's your man.
MSN, is it? I can't remember what his name is, but the Prince of Saudi Arabia. I'm your man.
I think he listens, actually.
Yeah, hopefully.
John, really appreciate your input. Thank you very much for this insight into finance and funding and how people can get onto the property ladder in investments with having little money in their own pocket. Thank you very much for coming.
No problem, Chris. It's been a pleasure.
So as you've heard from this podcast, you've got lots of options when it comes to financing your property deal. So the best thing that you can do really is to get educated as to what all those options are. Now, you probably don't have the time to go into as much detail as John does when it comes to learning what every single lender is offering and what their terms and conditions are. So the second best thing you can do is get connected to a broker like John, so that they can do that for you. And then when you bring your project to them, they can marry that up with the best type of funding, reducing the amount of money that you need in your own pocket. Now, if you want more information about funding, head over to source.co. But thanks for listening to the podcast. See you next time.